Hello, fellow RoboCapitals. Hope you're well. So we've got some big news today. The Atlanta Fed GDP now has gone from positive to all of a sudden predicting negative real GDP. Negative real GDP. In other words, an economic contraction, recession. Also, Trump and Zelenskyy literally get into a shouting match in the Oval Office, and it gets caught live on camera. The media was right there. It's almost like the Jerry Springer show. I mean, this is completely bananas. And then finally, we've got new inflation data that just came out today that we've got to go over and see how markets are responding. So let's first and foremost get into the GDP now, which honestly, I can't help but think this is political, but you guys be the judge here. So look at this. Just you tell me what changed between February 18th, where they were predicting that GDP would be positive 2%, over that, positive, let's just say 2.3%. And then 1 week later, we're at negative 1.5. Like, I do live streams almost every single day on the news. And I'm the guy that's always pointing out the cracks in the dam. And even I don't know of data that would cause that much of a drop, even in my prediction. Now, I would not have started at 2.3%. Yeah, obviously I would have started lower. But this is extreme, to say the least. So, I mean, let's just go back to Market Watch. And that's not it. Let's just go back to the calendar. If I could find it here. Where is, yeah, that's right. So we go back to the calendar, and let me get the exact date here. So it's not even February 18th. It's like, what's the date today? It's like all the way up to February 25th. I don't know how often they update this, but if their little chart is correct, let's just assume it's February 25th. So what on earth happened between, let's just say, February 24th, basically this week? And let's go back to the Market Watch calendar. Yeah, Monday is the 24th. So look, we've got now, maybe it could have had something to do with the consumer confidence numbers. I mean, maybe they're combining what we were talking about last week with Walmart, Starbucks, McDonald's, and then the Michigan survey. And then maybe they're combining that with the huge miss that we saw in consumer confidence from the Conference Board survey, excuse me. We saw jobless claims spike, but look, the expectations were 225 and we had 242. I mean, it's not like it went up to 500,000, for heaven's sakes. And then we had pending home sales go down, but I mean, is the data softening? Absolutely. But I don't know, especially from the Federal Reserve, when, they're going to look at things through rose-colored glasses. At least they did with the Biden administration. I don't know. Maybe someone got the call. It's like, hey, we need you to sharpen the old pencil there. And the outcome needs to be this bad. And you just need to reverse engineer the numbers to get to this. I mean, I hate to have my base case, kind of the tinfoil hat economic conspiracy theory, but yes, the data was soft. Absolutely. It was. and the markets went down. We could say maybe the narrative has shifted where bad news is now once again bad news. We've seen the 10-year treasury yield plummet, but still, I don't know how, looking at trying to put myself in their position, assuming that they're being honest, I don't know how, with just the data that came out this week or over the last 10 days, you would, and it's not like they went from 4% down to 1%. They actually went to negative 1.5%. In other words, economic contraction. I mean, something. Now, oddly enough, I don't know that I even agree with the negative 1.5%. So something is weird here, and I can't figure it out. Obviously, I'm doing this live in front of you guys. I'm going to have to really think about this over the weekend. But this does not pass the sniff test. And again, even if I was on the side of recession, what doesn't pass the sniff test is how they went from 2.3% down to a negative 1.5% with just the data that came out this week, even if I agree with where the chart is right now, or even if I agree with what it is now predicting. This is bizarre. I know CNBC had an article on this, so let's see if we can get some more details here. Headline: first quarter is on track for negative GDP growth, Atlanta Fed indicator says. The Atlanta Fed's GDP Now tracker of incoming data is indicating that GDP is on pace to shrink by 1.5% in the first quarter. While the tracker is volatile through the quarter and typically becomes more reliable. Right, but I get it. It is volatile, but it's not volatile to the point where they're going to negative 1.5% from 2.5. I mean, I don't watch the Atlanta Fed GDP Now that closely, but I have used it in other videos, and maybe I'm just not remembering, but I don't recall this dramatic of a move, especially taking it to this deeply negative. And again, based on what? Based on, if, let's just say, their GDP Now tracker was negative over the last 2 months. Okay, yeah, I get that. But what on earth happened over the last week? Looking at it through their lens, that would lead them to adjust their model to a degree which is this extreme. See, the central bank's tracker of incoming metric. Okay, we got that. Fresh indicators showed that consumers spent less than expected during the inclement oh, come on. Again, blaming it on weather. There's no way that you can go from 2.3 down to negative 1.5 just because we had a cold January. Come on. This is sobering, notwithstanding the inherent volatility of the high-frequent nowcast maintained by the Atlanta Fed. This is according to Mohammed Al-Arian, chief economic advisor at Allianz. This is sobering. I'll say it's not just sobering, it's bizarre. On Friday, Commerce Department reported that personal spending fell 0.2% in January, missing the Dow estimate of 0.1. And yes, that is softening, but I don't think it explains what's going on. Adjusted for inflation fell 0.5%. I like how now all of a sudden they're adjusting the numbers for inflation. Remember, like for the last well, leading up to the election. Remember, every single time that CNBC would talk about the retail sales numbers or consumer spending, they would never adjust for inflation. Now, oh, look at this. We got 0.5. Sure, we had 1% inflation. They would never tell you that the real number was actually negative. And now all of a sudden they're doing this, which is another, let's say, head scratcher. At the same time, contribution of net exports tumbled from negative 0.41 to negative 3.7. Maybe they're doing this because the trade deficit exploded. Okay, that could explain a little bit more, because if I'm not mistaken, when you're calculating GDP, it's not just, private sector spending, government spending combined. You actually subtract the deficit. And therefore, I want to actually, let's do this. I want to be clear on this here. Let's go and how is GDP calculated? If I'm thinking this through correctly, that could explain some of it, because I know the trade deficit, which you guys can see right here, just completely blew out. I mean, we're at, in fact, we're lower, or in this case, higher. You got to look at the chart upside down here because it's a negative number. But I guess said the best way, the deficit is now larger than it was. It's the largest that it's ever been. And that's even larger than the cerveza sickness. This is the trade balance, goods balance of payment basis. But let's get back to how they're calculating GDP. Let's see if we've got something that explains it. Okay, let's give me the formula here, please. Nominal, real, okay. Real GDP is calculated. Okay, yeah, we got that. Per capita, yeah, we got that. Formula, here we go. Net exports. There you go. So they're adding the net export. So obviously, if that's a negative, that's going to detract from GDP. So we've got consumption, government spending, investment, basically private sector plus government. And then we've got net exports. So if that's a negative number, that is going to detract from GDP. But there again, although that is a monthly number, this is a monthly number, guys. This negative 122 billion, that's a monthly number. So let's just assume that we're doing this quarterly. And again, this is tough because I'm doing it right off the top of my head here. But this is, let's say, 3.6. So you're looking at 300 and call it 400 billion, roughly. Yeah, I guess that does really move the needle. This might be, but again, I would go back to what changed over the last week, right? I mean, it's not like, here we go. It's not like just a week ago, they're like the trade deficit. Oh no, we're going to have a trade surplus. The trade deficit isn't going to be, of course, they knew that the trade deficit was going to be bad. Why? Because it's the tariffs. Because that, like them or love them, I'll let you be the judge. But the bottom line is, if you're a business and you're worried about tariffs, you're going to import as much as you possibly can as far as what your inputs are to your product right now, before you potentially have to pay an additional, let's just say 25% for those inputs or for your inventory. That just makes sense. So that's what's going on here. But again, it's not like the Atlanta Fed just woke up on Monday and like, oh my gosh, I forgot the trade deficit, So this is a head scratcher, guys. But this is something that we're obviously going to have to follow very, very closely. And if I'm not mistaken, usually the Atlanta Fed GDP Now indicator, is pretty accurate. It is true that where it starts the month or the quarter or whatever, you got to take that with a grain of salt. It's way more accurate the closer you get to the end of the quarter, and we can see the direction it's going. My goodness gracious, if you had this much of a drop just in the last week, I mean, think about it. What if over the next couple of weeks the data continues to soften? I mean, where are we going to be? -5? Let's get back to the article here. In addition, the bond market has been pricing in slower growth. 3-month Treasury yield this week moved above 10-year. In other words, it inverted. You guys know that from watching my videos. My sense is a quote, "The complacency that has crept into asset markets is about to be disrupted." This is Joseph Brucelis, chief U.S. economist at RSM. Markets increasingly believe the Fed will respond to the slowdown with multiple interest rate cuts. Traders in the Fed funds futures market increased odds of quarter percentage point reduction in June to about 80% as of Friday afternoon, and raised the possibility of 3 such cuts total this year. Yet you're seeing the stock market go down, which is completely different than what we have seen over the past, let's say, year, that whenever we got a sniff of, oh my gosh, the Fed might drop or cut rates more than we thought before, the market just rips higher. And all of a sudden, it's maybe we've turned the corner where that bad news is bad news. Talk about that all the time on this channel, how important narrative is. That is some wild stuff. But speaking of wild stuff, let's go to this shouting match that Trump and Zelenskyy got into. And never a dull moment. Never a dull moment. Let me switch up the screen share. I'm not going to play all this, although it's very entertaining. I mean, when I first saw this headline, I thought they were kind of exaggerating just to create drama. And I'm like, oh, they're just trying to make Trump sound like a blowhard and blah, blah, blah. But then I actually watched the video and I'm like, yeah, no, that's pretty darn accurate. So the headline here is Trump Zelenskyy Oval Office meeting explodes into shouting match. Yep. So I'm going to start here right around the 6-minute mark. We're going to watch a couple clips here, and then I'll give you my thoughts. And you guys tell me what you think in the comments.
Thanks. You haven't been on.
Josh, can you hear that?
Yeah, I can hear it.
The audio is okay?
Cabinet. You haven't been around. We gave you, through this stupid president, $350 billion. We gave you military equipment, and you men are brave, but they had to use our military. If you didn't have our military equipment, this war would have been over in 2 weeks.
In 3 days, I heard it from Putin. In 3 days, this is something
maybe less.
In 2 weeks, of course, yes.
It's going to be a very hard thing to do business like this.
Again, just say thank you.
I said it a lot of times.
Except that there are disagreements, and let's go litigate those disagreements rather than trying to fight it out in the American media when you're wrong. We know that you're wrong.
But you see, I think it's good for the American people to see what's going on.
I understand, sir.
I think it's very important.
Hats off to Trump. I mean, I absolutely think this is good for the American people to see this, and on many different levels. And we've done this in the United States for as long as I can remember, and I think it's good that things are starting to change, where we present politicians as if they're like comic book heroes, as if they're not real human beings, as if they don't wake up in the morning and, let's just say, use the restroom, as if they don't have the same problems, if they don't, as though they don't make the same mistakes that just we make in our own life. And most of the politicians, I would argue, make even more mistakes, and they're the dregs of society, in my opinion, most of them. But this shows you that although the mainstream media pretends that when they're behind closed doors, that these people are civilized and they're making all these rational decisions, and it's never based on emotion, it's never based on ego, it's never based on self-interest. I mean, that is nonsense, but that's the way it was presented. That's even here in the United States, that's always the way it was presented. But now we can see that that's not the way it works, that these people are human beings, and a lot of them probably, I'm not saying Trump and Zelensky, but a lot of the politicians handle these things like a petulant child. A lot of these people handle things in a way that's worse than just the average Joe and Jane would, just dealing with people in their real life, coworkers, friends, family, etc. So I think this is definitely a positive, because you pull back the kimono, and it allows the people of the world, for that matter, to realize that these politicians have the exact same flaws as we have, if not more extreme flaws. And therefore, when we're voting for this person or that person, we need to understand. And then when we're seeing policy that's put into place, we need to understand that maybe, just maybe, I'm not talking about Trump or Zelensky, I'm just talking about politicians and central planners as a group, that maybe these policies aren't necessarily put in place for the benefit of society at large, just by this comic book hero that is altruistic with an IQ of 150 that makes these unemotional decisions. That maybe, just maybe, that policy that was put forth has nothing to do with the American, or any of the American people, the Ukrainians, the Germans, the Australians, the Canadians, whatever. And maybe it has more so to do with just, this guy got pissed off at this guy and they got into a pissing match, which I think happens a lot more than people realize. But this kind of sheds light on that.
That's why I kept this going so long. You have to be thankful. You don't have the cards. You're buried there. Your people are dying. You're running low on soldiers. Listen, you're running low on soldiers. It would be a damn good thing. And then you tell us, I don't want a ceasefire. I don't want a ceasefire. I want to go, and I want this. Look, if you could get a ceasefire right now, I tell you, you take it, so the bullets stop flying and your men stop getting killed.
Of course, we want to stop the war.
But you're saying you don't want a ceasefire.
But I said to you,
I want a ceasefire.
with guarantees.
Because you get a ceasefire faster than an agreement.
Ask our people about ceasefire, what they think.
That wasn't with me. That wasn't with me. That was with a guy named Biden, who was not a smart person. That was with Obama.
It was your president.
Excuse me. That was with Obama, who gave you sheets, and I gave you javelins.
Yes.
I gave you the javelins to.
See, so far, just my opinion is I agree with Trump's position, but I like the way Zelensky's handling it a little bit better than Trump. And obviously, this is just a 10-minute video. I didn't see the whole thing. I don't know what was said prior. But again, I'm not saying I like Zelensky more than Trump or anything like that. I think Zelensky's a criminal. But just the way the interaction is playing out, if it were me, and I was trying to negotiate, I think it's far more effective to take the approach that Zelensky is taking. He's much more level-headed, which I think is good. Although, as far as who's right, who's wrong, and I obviously agree with Trump's position that, look, Zelensky, you're out of cards, dude. You got nothing. You come to the table, the negotiating table with us, and you're going to get a hell of a lot more than you just telling us to pound sand and just trying to, duke it out with Putin on your own without our financial backing. I mean, obviously Trump is correct in this, in his analysis, and what he's trying to get Zelensky to do, which is just stop the damn war, for heaven's sakes. This is if you're Zelensky right now, you've got to realize that you're not going to get what you want. There is no end game where you win. I'm not saying it's right or wrong. It is what it is. So how do you navigate this in a way that creates a deal that is the least bad for you? And unfortunately, I think the way this ended is he just left. There's no deal, and that's not good for Zelensky, and obviously that's not good for the Ukrainians fighting. That's not good for the Russians fighting. It's not good for anybody. It's to lose, lose, lose. But if you're Zelensky, Trump is right. You're not going to get what you want. So you've got to just take the least bad deal, and you're going to get the least bad deal if you've got Trump negotiating with you, as opposed to you just trying to, again, just duke it out with Putin.
Take out all those tanks. Obama gave you sheets. In fact, the statement is Obama gave sheets and Trump gave javelins. You got to be more thankful, because let me tell you, you don't have the cards. With us, you have the cards. But without us, you don't have any cards.
One more question to Mr. Vice President. I'm sorry.
It's going to be a tough deal to make because the attitudes have to change.
What if Russia breaks ceasefire? What if Russia breaks peace talks? What do we do then? I understand that it's a heated conversation right now.
What are you saying?
She's asking, what if Russia breaks the ceasefire?
What if anything? What if a bomb drops on your head right now? Okay? What if they broke it? I don't know. They broke it with Biden because Biden, they didn't respect him. They didn't respect Obama. They respect me. Let me tell you, Putin went through a hell of a lot with me. He went through a phony witch hunt where they used him and Russia. You ever hear of that deal? That was a phony Hunter Biden, Joe Biden scam. Hillary Clinton, Shifty Adam Schiff. It was a Democrat scam. And he had to go through that. And he did go through it. We didn't end up in a war. And he went through it. He was accused of all that stuff. He had nothing to do with it. It came out of Hunter Biden's bathroom. It came out of Hunter Biden's bedroom. It was disgusting. And then they said, oh, the laptop from hell was made by Russia. The 51 agent.
So now I get what the point he's trying to make is that basically Putin has a better relationship with Trump, with me, this Trump's standpoint, than he did with Biden or Obama or anything like that. And therefore, I don't know if he's going to back out of the deal or not. I don't know if he's going to go back on his word, but there's a lower probability that he does that with me than with anyone else. That's the point he's trying to make. It's just he's, kind of getting off on a tangent, which is just kind of Trump.
The whole thing was a scam, and he had to put up with that. He was being accused of all that stuff. All I can say is this. He might have broken deals with Obama and Bush, and he might have broken them with Biden. He did, maybe. Maybe he didn't. I don't know what happened, but he didn't break them with me. He wants to make a deal. I don't know if you can make a deal. The problem is I've empowered you to be a tough guy, and I don't think you'd be a tough guy without the United States. And your people are very brave. But you're either going to make a deal or we're out. And if we're out, you'll fight it out. I don't think it's going to be pretty, but you'll fight it out. But you don't have the cards. But once we sign that deal, you're in a much better position. but you're not acting at all thankful. And that's not a nice thing. I'll be honest, that's not a nice thing.
Yeah. So, I mean, it's a nice thing. I don't know that that's really relevant here. I mean, let's just sign a deal. You know, if one party's being nice or not. But I know that's not really Trump's point. You know, I think, like I said, I don't like Zelenskyy. I think he's probably laundered a lot of money, and you know, who knows. But I think he handled himself relatively well there. I want to give him credit where credit's due. It's a tough position. You know, we were dealing with Trump, and you got JD Vance, although you got the media definitely on your side. But I like the way he handled it, but I don't like the result that he allowed to happen, which is you leave there without a deal. And that's because the problem there for Zelenskyy, in my view, and I'm not an expert on this, I'm just giving you my opinion, is the next time you come to the negotiating table, you're going to get a worse deal. It's not going to get better for you. It's only going to get worse. So I don't know how he could have navigated that, because he was pretty level-headed, but obviously he said some things that pissed off Trump, which he should not have said, because he has to realize that like it's only going to get worse from here. And unfortunately for him, he's in a position where he has no leverage. He has no leverage. And you got to just realize that. It's unfortunate because at the end of the day, Trump doesn't pay the price. JD Vance doesn't pay the price. Putin doesn't pay the price. Zelenskyy doesn't pay the price. It's all the innocent Ukrainians, and it's all the innocent Russians. You know, the kids that are like Josh's age that are just out there killing each other. And unfortunately, that continues. For what? For what? Right? That's my opinion. But I'm glad that the United States, or excuse me, that the American people and the people around the world get to see that these politicians, a lot of times they're making decisions based on ego, temper, their own self-interest. And a lot of times they're not prioritizing, you know, what's best for the people of their country. They're only human at the end of the day. So hopefully this plays out a little different. It's just, if you want my prediction on it, unfortunately, I think it's gonna, you know, Zelensky's just gonna have to come back to the table, and when he does, he's gonna have even less leverage than he has now. And obviously, Putin is going to be watching that. And if I'm Putin, I'm like, okay, now the ball's really in my court. Now I can do almost whatever I want to do, because, you know, if Zelenskyy doesn't have Trump, then it's my deal, and he has to agree to basically whatever I want. And you know, that's again, Zelensky's in a bad position right here for sure. And I'm not saying he's right. You know, this is not a judgment call. This is not saying who's right, who's wrong. You know, you can decide that on your own. I'm just saying, you know, trying to be as objective as possible, just looking at how this progresses and who's got the leverage here. Now, you know, if it was 90-10 before, as far as Putin having 90% and Zelenskyy having 10, I would argue after this, it's basically 99% and 1. So new inflation data. Let's check that out. I got to do the screen share switch up. And let's go over to the calendar. And what was most kind of interesting, let's just say, about all the data that came out today, or what was most notable, I think, is two things. Personal incomes up 0.9%, which you would think is great, but then personal spending a negative 0.2. I mean, we talked about that when we were looking at GDP now, and that's not adjusted for inflation. When you adjust for inflation, that's an even bigger negative number. So, and it's also weird that you would have personal income exceed expectations to this degree, and you would have personal spending lower than expectations to that degree. Something there is weird. Doesn't pass the sniff test again, but this is not a good number. But it just doesn't explain the what we were talking about before. Everything else is pretty much coming in line with core PCE. I guess let's look at what happened month over month, so we can try to determine a trend. So PCE basically the exact same as last month, so no movement. PCE down slightly year over year, but again, month over month. The core app's actually up 1/10 month over month, so that's going in the wrong direction. And then core PCE down, that's likely just due to base effects. And then you had this U.S. trade balance in goods that just ballooned. I mean, 122 is bad, but it goes to 153. Wow. Wow. So let's see how markets are responding. And let's go to US. We've got, oh, wow. So the S&P 500 up 1%. The Dow way up 600 points. NASDAQ up 300. I don't know why this would be up other than just, profit taking, because it's been down so much over the past, call it week and a half. Although maybe just because the market is starting to price in more Fed rate cuts, maybe that's starting to transfer or bleed into the Dow and the S&P and the NASDAQ. Maybe. I'm not good enough at analyzing these things at this level. I'm more of a macro guy to tell you why I think there's well, I can tell you why I think, but take it with a grain of salt, because this is definitely not my area of expertise. I would guess it's maybe because Fed rate increases are the probability is going up, or maybe it's just profit taking. Nothing goes down in a straight line. Here's more kind of negative economic news. Intel delays U.S. chip plant opening to next decade. Okay, was supposed to start production in 2026. So, all right, if AI is what's going to prop up the economy, I don't know that they'd be delaying this until 2030 or beyond. And then you can see, okay. Another thing that would get me concerned for the market is looking at what the 10-year Treasury yield did today. 10-year Treasury yield down big again. Look at this. We're almost, and we're getting close to a 3 handle here, guys. I mean, we're still at 4.21, down 7 basis points, almost 8 basis points on the day. But now the curve is inverted. I'm looking at Fed funds and the 10-year by 12 basis points. So the curve is getting more inverted. And the Fed is just keeping rates parked. Let's look at the 2-year Treasury, because obviously the Fed typically follows the 2-year Treasury. Hmm. Yeah. Yeah, look at what the 2-year Treasury's done lately. It's gone from 4.36 down to 3.98. It's down, call it 40 basis points, and the Fed has not done anything. And if you guys want to know why I'm focusing on this so much, let's just do 2-year versus Fed funds. Well, that doesn't help. Okay. Tough chart to read. Let's see if the Fred website has a better one. Yeah. See you guys. Usually, okay, so first, if you guys can't see this, the Fed funds is represented by the red line, and the 2-year Treasury yield is represented by the blue line. So what you're going to see most of the time is the blue line moves first in both directions, by the way, and then the red line follows. So look at what has happened more recently. See if we can zoom in there, where that red line, the Fed funds, is paused, but you're starting to see the 2-year go back down. And look at, I mean, it was even consistent with this cycle, right? Where the 2-year starts to go down. Dang it, I wish it wouldn't freak out. Like, why is it doing that? I can't. Well, you guys can see kind of below where my pointer is. You can see where that blue line starts to go down there in 2023. And then sure enough, call it 6 months later, 7 months later, then the Fed pauses. And then we get to the beginning of 2024, and the blue line really starts to go down. And then call it 3 or 4 months later, the Fed drops. And now what we're seeing, or just over the last couple of months, is those two lines converge. We see the Fed and the red line and the blue line basically are pretty much at the same level, but now we're seeing that blue line start to drop again. And if this continues, then you should assume that that red line is going to follow with a 1-2 month lag, if history is a teacher. And again, there are no certainties, only probabilities, but you look at a full chart, you guys can do this on your own, and you see that the vast majority of the time, that blue line goes first, and wherever that blue line goes, the red line follows. Bitcoin up today, so they get a breather there. I have no idea why, other than nothing goes down or up in a straight line. Gold down substantially. Maybe that's because of a strong dollar. That's according to CNBC, or maybe it's just taking a breather. Oil up to 73. Now, oil had gone down to about 68. Actually, let's look at a chart, because a lot of people are blaming this on supply side stuff. But if you're looking at the 10-year Treasury yield and the Atlanta Fed, for heaven's sakes, you've got to think, okay, maybe it's more a demand side story than it is a supply side story. And so let's look at, this was only January 15th. We were at 82. And then we just see it come straight down. Let's see if we can get a little, there we go. That's easier to see. And again, I think a lot of quote unquote experts would say, oh, well, this is because Trump's all about drill, baby, drill. Maybe, obviously that plays into it to a certain degree, but is it more about that, or is it more about what the 10-year Treasury yield's telling you? That means slower growth and inflation expectations, especially when you combine that with the consumer sentiment, with what Walmart was telling us, with what Starbucks is actually doing, Join, et cetera. These mega corporations, a lot of them in trouble, laying off workers or just going bust outright. And then you combine that with whatever the Atlanta Fed GDP is smoking to get down to negative 1.5%. And you have to ask the question, is this drop in oil from 82 down to where it was just the other day at 68? I don't know why it's not. I know for a fact it was at 68 today, or the other day, because I was going to do a story on that. I don't know why it's not showing it, but it gets down to a 60 handle. We've got a huge decline there. I think you have to at least consider how a lot of this decline could have been the market looking at demand and demand softening, and that would, again, be consistent with an economic contraction.
Well, George, I can tell you from where I just was that makes perfect sense. Last weekend, I was at a Walmart in Baltimore.
What on earth possessed you to do that?
Well, we were in
taking your life into your own
Yeah,
hands.
it was like a fentanyl war zone in there. Me and PJ went. We were the only gringos there. That is for sure. And
gringos, yeah. Yeah,
But-
I don't know why you'd even go to Baltimore.
well, we were in Maryland, and we were actually at a really nice place there. But we had some
Baltimore is in
spare,
Maryland.
yeah. Well, we had some spare time, so I was like, "Hey, PJ, let's go explore this place." And so we were gonna interview people at the Walmart in Baltimore, but it was just an absolute. It was a war zone. We were like, "We got to get out of here." We aborted mission.
Yeah,
but their economy is definitely not booming. But then I came home to Massachusetts, and when you
booming if you're a drug dealer, if you're a fentanyl dealer, yeah, it's on fire.
When I came home to Massachusetts, it's like when you don't see someone for 6 months. It's really startling where the malls here are shutting down, and they're like, I went into the mall because I had to get some shoes, as I'm sure you'd be proud of, George. But I go into the mall and it is a ghost town. There wasn't anyone in there, and half the stores were shut down. And so I couldn't even find a store.
I mean, Boston or in Lynn?
In Lynn, not in Boston.
Okay, and just to give people an idea, that's how far outside of Boston?
20 minutes.
20 minutes, okay. And you were there how long ago?
2 days ago.
No. Before that.
Oh, not since the summertime.
Okay, and how were the malls back then?
They weren't great, but at least their stores were open. And so the Macy's shut down. I've never even seen a Macy's shut down before. I just thought they were everywhere, always open. And so the Macy's shut down, the Nordstrom shut down. There was nowhere to really get anything.
And this is in the big mall in your town.
Yeah.
Yeah, so you have to think about the knock-on effects too, because those are huge anchor tenants, obviously. And without those guys, the mall's done.
Yeah, it's the complete opposite in Scottsdale, where at the gym that I go to, if you don't have a supercar, you're just a brokey.
Yeah. Yeah, you probably go to Lifetime Fitness, I'm guessing.
Yeah, but everyone there has a supercar. But here in Massachusetts, I mean, it's like people won't even go out to eat, and it's like all the restaurants are shutting down. I mean, it's like an economic depression here, but like the most booming economy of all time in Old Town Scottsdale.
Yeah, but think about that, because Old Town Scottsdale is going to represent the top, let's just say 25% of income earners, or more so represent that, where Lynn, correct if I'm wrong, is much more blue collar.
Yeah.
And it's going to be far more representative of the middle class.
Yeah, absolutely. That's exactly what I've seen.
Yeah. So, I mean, that makes sense. I think that's just, in a nutshell, what we're seeing throughout the United States is the rich people are doing fine. And the poor and middle class are just getting hammered. And they're waving the white flag. I don't know how much more of this they can actually take, but it seems as though maybe, just maybe, it's starting to play out in the data and it's starting to play out in the GDP numbers, possibly to a point where even the rich people, even the CNBC types, will admit that the economy is not doing well. And see, the problem with that is, how does that play into the stock market? It goes down. And then what happens, Josh, if asset prices go down and then the Scottsdale Mall looks like the Lynn Mall, right? Because the only reason that Scottsdale Mall looks like the Scottsdale Mall is because of asset prices. So if that goes away, then you have the rich people in the same position as the poor and the middle class have been over the past, call it 2 years. I mean, we got to see how this plays out. We got to see how this plays out. All right, guys, on that bombshell, enjoy your weekend. Make sure that you're standing up for freedom, liberty, free market capitalism. And I will see you on the next video.